This video, I'm going to be explaining why I am long ServiceNow, which is an enterprise software stock. If you have not yet followed my Instagram, go ahead and follow. Here's my Instagram. I publish trading content along with any theses that I have or investment articles that I like. So if you'd like to, go follow and let's get started. So as of May 11th, I am long ServiceNow. My entry price is around $91. The reason that I'm long is I believe that ServiceNow is undervalued, and I believe that the stock is undersold on the oversold on SaaS fears compared to the overall market. And specifically, ServiceNow attracts my interest because it has 40% market share, and according to the rule of 40, it has remained consistent above 50%, giving me enough conviction to stay long on the stock. We've seen a growth in revenue, which tells me that the free cash flow is also increasing, and we are seeing that. And we saw the same thing with AMD. When I invested in AMD, fundamentals were strong. I didn't quite understand why AMD kept selling off, but it was one of my best investments, and strictly all fundamental based. Alongside, ServiceNow also deals with a seat-based revenue model, and the last quarter they were actually changing their model revenue to a more of a hybrid, so pay-as-you-go outcome utility based, and we saw 50% of that revenue come in, and it was a success. So that's why I'm long ServiceNow. Alongside that, I also believe that we're kind of shifting over to agentic AI. Now we have CPUs and RAM, which is why we're seeing a lot of the semiconductors rally across the market. And I believe that will continue to do so with the shortage, but also with the demand and shift to agentic AI. We're going to see more companies like ServiceNow, anything that's SaaS, if catching on to it, they will be able to adapt within that for agentic AI models. And Ken Griffin himself said it yesterday in an interview that agentic AI is elite, and it's now replacing what PhDs will be able to do in just a matter of hours. So that adds to my thesis as well. As of currently, it's closing at $95 as of Friday's close. But on top of that, there is a strong buy across the analyst ratings with a high price target of 226, low end of 125 to 122, which gives me conviction. And not only am I thinking the right thing, but also the market is starting to catch on to that as well. So recently, Trump has also revealed his current holdings, and ServiceNow is one of them, along with Adobe and other CRM companies. So in this case, this is the reason I'm long, along with the projected revenue of 50 billion by 2030 for SaaS companies, at least with agentic AI. Now, specifically to their cash flows, ServiceNow has nearly doubled since 2022. Alongside that, we have also seen growth in operating, which is something I like to see in companies, is have free cash flow growth, operating growth, and then also investing more into capex, which we are currently seeing that here on the cash flow statement. Another point is also their PEG ratio being at 0.88, telling me that it's still not overvalued and it's still at an undervalued price. So here, comparing the trailing price to earnings ratio to the forward price to earnings ratio, the trailing is still significantly higher, which indicates that the market's still somewhat pricing in some sort of fear in the market.